In my episode last week, I exposed the Chinese pump and dump scheme that ran CHSN all the way from about $5 a share to over $44 a share in one day, only for the stock to dump all the way back down. I exposed it right here on YouTube, and guess what? That stock has now been suspended by regulators and no trading is allowed while they're investigating it. So that's good. But you know what happened today? We saw a move, and I've been trading for a long time. We saw something I've never seen before. Let's set the stage. All right, we've got a stock pre-market that starts squeezing up. Now, as a momentum trader, I love it. So the first thing I'm asking myself is, what's the catalyst? What is the news event that's bringing the volume into the stock? And I can't find it. Now, it's not totally uncommon that we'll see a stock that makes a big move without news. And typically that type of technical breakout is called a short squeeze. So the next thing I check is, what's the short interest of this stock? Let's jump onto the screen share. So the first thing I see is that the short interest is only 1.6%. And to help you get oriented, this is the stock that we're looking at right now. It's currently up 168% on the day right now. It's a little bit off of its high, which is $6.29. Yesterday, it closed at just over $2 a share. So this is a huge move overnight, but there's nothing to support the move. So when we look at the short interest, we can see it's 1.66%. It's negligible. That's nothing significant. That's not going to be enough short interest to create a short squeeze. And so then this is what I do. And for those of you guys perhaps who are tuning into this episode for the first time, this is a good one to watch because this kind of highlights how crazy the market can be and how important it is as an active trader to trade the chart and to not get caught up in the fundamentals, because there are times where the fundamentals can become very disconnected from the price action. It's very possible that this company has no business being valued as high as it is right now. And if we're going to talk about the valuation, this is currently being valued at about $250 million as a company. And I believe last year their net profit was something like $2 million, which is, I mean, it's not nothing, but a $250 million valuation on a company doing $2 million a year. And their sector is they're selling wine and caviar, things like that. I mean, that's a great business, but it's not an app. It's not a pharmaceutical company. It's a good business, but let's be realistic. $2 million a year in net profit, $250 million valuation, 100x? I don't think so. I mean, that's just my gut. But again, you have to focus, if you're an active trader, on trading the technicals. And so the technicals of this stock, when it starts to squeeze up, I'm looking at it and I'm thinking, all right, it's hitting my stock scanners right here. So it's hitting my running up scanner, which means the stock is moving up right now. It was hitting my high of day momentum scanner, which meant the stock was making a new high of day, and it was moving up my top gainer scanner. It's now in the first place, making it the leading percentage gainer in the entire US market right now. So when I see it squeezing up, the first thing I do is I click on the ticker right here, and that's going to update my charts and it's going to update my news feed. Now I look at the news feed and I can't see any catalyst. Now there's some headlines that came out a little bit later, but I don't see any news. So the next thing I do is I click on the ticker and I pull up our quote window here where you're trading, and I scroll down, and this is what I'm looking for. What's their address? And I see Hong Kong, HK. So I'm thinking, okay, this is another Chinese stock. Now, if you watched my episode last week on exposing the pump and dump scheme on CHSN, you will know that there are a lot of shady things that happen with some of these Chinese stocks. I don't know if that's happening, if any of that's going on with this one, or if this is just a crazy move that we saw today. We'll probably find out in the future. So as of right now, we'll just assume that it's a really crazy move. All right, so I see that it's a Chinese company, and that alone tells me this has the potential to be exponentially more volatile than perhaps its US counterpart in the wine and caviar business. Just the very fact that it's a Chinese stock, now it's like, okay, this might actually do something crazy. So I get zoomed in on the chart here, and this is where I'm doing my technical analysis. And I see initially we have this spike right here up to about 3. And what was really interesting was it popped up to 3 right here, and it holds that level just for a moment. And so I pull up my level 2 window, which is right here. I pull up my level 2 and I'm looking at the bid, and what I see on the bid, so I look at the bid and what I see on the bid, so this is the bid and this is the ask. all of a sudden at $3, I see a 40,000 share bid. And we always abbreviate and drop the 2 zeros, so it shows us 400. There's a 40,000 share buyer there at 3, and on the ask, it's 315, and there's only like a 1,000 share seller. So all of a sudden now I'm like, oh, okay, there's a huge buyer on this at $3. I don't know where they came from. And what's kind of crazy is that at that moment, how much volume did this stock have? So at that moment, we had already had, well, let's see, about 3,000, 4, 5, 6,000, about 50,000 shares of volume in total. So all of a sudden you have an order sitting on the bid that is the total of all the volume that's traded so far today. That's very, very bullish if that order stays there. Now, what we know is that some of these people who are trying to move these stocks higher will put out a spoof order. A spoof order is when you put out an order to create the illusion of strength, because when I see a big order on the bid, I'm thinking someone else wants to buy this. This is strong. And what I usually think is, if it's a 40,000 share buyer, if I wanted to, I could buy 5,000 shares right now. And if I don't want to hold anymore, I can just sell that person buying with their 40,000 share order. They become a form of support. However, a spoof is when they put the order to create the illusion, but they have no intention of their order actually getting filled. And if the price starts to come down, that order vanishes. It's gone. And now if you try to sell, that person's not there to sell to, and the price is going to drop. So when I saw that big order, to be honest, I was a little skeptical because I was like, it's kind of a huge order. Is someone really so bullish on this stock right now, even though it has no news, that they're buying 40,000 shares? And again, it doesn't have high short interest, so it's not a short getting squeezed out. So it doesn't really make sense to me. So for that reason, I didn't take a trade on this micro pullback right here, even though typically I would. In this case, because that big order, it just threw me off. So it ends up going up to about 340 and 360. It does another micro pullback here, and it pushes up to 4. But on this second pullback, we still were dealing with larger spreads. And I just was like, I don't know. I think I'm just going to wait a second on this. I just was getting a little bit of a funny feeling. Now, having been trading, in the markets for as long as I have, I try to trust my gut, that's a level of educated intuition that I have. And so in this case, it was telling me to just hold off. So it hits 4 and then dumps all the way back down to 3. And it goes down to about 280. So that big buyer at the 40,000 share buyer, the order was gone. So now I'm like, okay, the order's gone. Yep, that's a little sketchy. Not sure I'm going to be able to trust this. So then we end up moving sideways here. And through this area, we're kind of bouncing between, about 285 and 310. It's sort of jumping up. It's sort of dipping back down. It just didn't feel quite right. And so it pops up here to 360, but I didn't take that trade. I was like, I don't know. I'm not feeling it. I'm looking at the volume. We had higher volume on some of these selling candles, higher volume on this selling candle again. So it felt like this was just a little sketchy. I was just like, I don't know. I can't trust it. But as it starts to come up here a little bit higher, I recognize that, look, this thing is holding up. I drew this line connecting these two lows. This created this ascending support line, and it's holding this level. It's holding our moving averages. It's holding the volume weighted average price. So I decided to take a position right around here. I got in as it starts to curl. And right here it curls through. I wanted to see it break this level. And then my next target was this level here. And as we break that 350, we end up pulling back, but then squeezing up to 4. And we get a really nice move here up to a high of, what was that, about 440. And right now it's up 183% as it sits right underneath the high a day of 629. So it's still holding up really well. Okay, so then it pulls back for a moment, micro pullback, it pushes a little higher. And through this area here, I had some nice trades. Now you can see I'm sitting up $5,418.11 on the day. And my last trade was at 928. So I didn't take any trades after the open. I only traded this during the pre-market session. Once I crossed my daily goal, which is 5,000, I said today, because it's Friday, the end of the week, I was like, you know what? I'm going to take it off the table and lock it up and be done. So discipline is really important for me. And I just kind of knew that something odd is going on with this stock. So anyways, it goes up to about 460. I got some nice trades on this move here. it pulls back, dips back down a little bit. And through this area, it's kind of choppy. And the thing that was really weird was it felt to me like there was a huge amount of selling. I took a couple trades on this with 10,000 shares, and I got filled buying in an instant with no slippage. That told me there's a lot of people selling. But when I would turn around to sell, it was harder to sell. So it was easy to buy, hard to sell. That means there's a lot of other people that are happy to sell it, but not as many people that are happy to buy it. So that gave me a little bit of reason to be cautious. It drops back down all the way to the volume weighted average price. And at this point, I said it's out of play. And you want to know why I said that? I said that because on the 1 minute chart, I use a technical indicator called the MACD, the moving average convergence divergence indicator. It's right down here on this bottom pane. And this for me is a really helpful indicator to remind me to focus on trading the front side of the move. And then once that MACD crosses over, it indicates the moving averages are condensing. They're coming back together. So moving average convergence divergence indicator. So they're converging here. And when they're converging, the stock's usually going sideways. And that's just going to be a harder place to trade it and make money. So I said, I'm going to be done trading it for right now. Let's just see what happens. I said, let's wait for a 5-minute setup. And then all of a sudden, look at this. Look at that. Holy smokes. This thing drops from 450 all the way down to 270 and then rips back to 515 and makes a new high of day. That's something that I have not seen before. This was a absolutely insane, ridiculous move. So what caused that dump? Look at this. So it's sideways, and then all of a sudden, look at that. And this is on a lot of volume. These are, the millions of shares trading here. So it drops from 440 all the way down to 270, and then it screams all the way back up to a new high at 518. It went up about 100% in 40 seconds from a low of 280 up to over $5. So what happened was right there at 9 a.m. at the top of the hour, breaking news came out. Now remember, this stock had no news. So all of a sudden news comes out and it's not good. The news is they've announced the pricing of a $10.8 million public offering. Okay. So this is called a secondary offering. They're selling more shares onto the open market. So we look at it and we see the price of this offering is at 40 cents a share. Oh my goodness. So 40 cents a share is the price of the offering. 40 cents, and they sold 27 million shares, and they raised about $10 million. So $10 million in gross proceeds or net proceeds raised for the company. So now we got to take a step back and look at this for a second, because this is insane. Usually, when you have a company that does a secondary offering, the price will drop, and usually it drops to around the price of the offering. So the way these offerings work is when the company first IPOs, when they first sell shares on the open market, let's say they sell 10 million shares. They sell 10 million shares on the open market for $5 a share. They raise $50 million. They take that $50 million, it goes into the company. They use that money to grow the company, hopefully scale it. And as they start putting out good earnings, reflecting that they've done a good job, the stock price will go up from 5 to 6 to 7 to 8 to 9 to 10. And then all of those shareholders are benefiting as the price goes up. But with a lot of small cap companies, well, the road to success is bumpy and they struggle at first. And so if the stock price goes down to 3, to 2, to 1, well, the company is not performing super well. And they might get to a place where they're like, in order for us to turn things around, we actually need to raise more money. So to raise more money, they sell more shares on the market. But they can't sell them at the IPO price, right? That's too high. So they end up selling them at a discounted price. And in this case, this is kind of wild to me. So this stock was trading at $2 yesterday. Yesterday it was trading at about $2 a share. So if they wanted to raise $10 million, in theory, they could have sold directly on the open market at approximately $2 a share. Why wouldn't they have done that? Well, the reason they wouldn't have done that is because in order to raise $10 million, how many shares would they have to sell at $2 a share? 5 million shares. So is there the volume to support that? Well, unfortunately, there's not. Yesterday, it only traded 400,000 shares of volume. The day before was 700,000. The day before that, 500,000. So it's trading an average of a couple 100,000 shares a day. So typically when these companies do a secondary offering and they do a direct offering where they sell shares on the open market, they don't want to be the primary seller of stock, because if they're just dumping shares all day long, the stock price is going to plummet. So in the case of GameStop, for instance, when they sold, what was it, 45 million shares on the open market, they did it at a ratio of about 15%. So their selling volume was about 15% of the total volume. So the market was able to absorb that selling without it crushing the stock price. So it's that sort of delicate balance. They don't want to crush the stock price, but they do want to sell shares. So in this case with TWG, what I suspect is that they recognize pretty quickly that to raise $10 million, it would just take too long based on the current daily volume. So they instead sought advice from a investment bank to help them find a potential investor out there that was willing to cut them a check for $10 million. But if you came to me, let's say, or someone else and said, hey, I want $10 million, well, that investor has to, of course, be sold on the deal. They have to feel like it's a really, like this stock is going to go somewhere. They've got huge potential, da, da, da. So naturally, they're going to look at the earnings of the company. Now, if we look at this stock here, we've got a couple different filings that we can look at. So I use this website, BAM SEC. It kind of helps navigate the filings. So, and you know, this gets into doing fundamental analysis, which most day traders aren't going to need to do because we're focusing so much on technicals. But knowing how to read your financial statements and how to read a balance sheet is helpful, and it is interesting. So as we scroll down on this, you know, we've got all this info about the way the company's operating, da 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 da. So let's see. So here we go. So these are the results of operation, and this is the year that ended December of 2023. So the total revenue was $16 million. The cost of sales was $11 million, and the gross profit was $5.3 million. But then they had some other expenses, so their profit loss before tax was $3 million, which, to be honest, is impressive. We see a lot of these biotech companies, these pharmaceutical companies. Of course, this isn't one of them, but we see a lot of them that are running with. They're just running in the negative. They don't make any money because they're doing research and development and they're hoping that they develop something that people will want to buy. But during the R&D phase, they're just being funded completely by shareholders and by offerings. So this is the gross profit of caviar, the gross profit of wine, da da da. So they're mostly doing the caviar. Anyway, so we see here that, you know, this is a company that's producing profit, but like I said, it's $2 million. So its current trading price, well, its trading price before this move, it was trading at $2 a share. So $2 a share, and the total number of shares available looks like about 9 million shares. But let's round up to 10. So a $20 million valuation on a company doing $2 million a year of net profit, it's a 10x. You know, multiple. It's a little high. I mean, I honestly think for caviar and wine, but nonetheless, you know, that's how the market's pricing it. Okay, well today, right, that 10 times 6 is a $60 million company. So now we're closer to a $60 million valuation, which their revenue certainly doesn't support. But wait a second, the number of shares has just gone up. It went from 10 million shares approximately, plus 27. So now we're at about 37 million shares. So 37 million shares times $6 a share. So now all of a sudden you're talking about a $200+ million valuation. That's kind of crazy. So what usually happens when you have this type of offering is now you've got 37 million shares available to trade. And so you figure, well, but really the company hasn't changed in profitability yet. So if it was previously valued at 20 million, you know, about $20 million, let's just say roughly, then this should be probably going back to about 75 cents a share. That's sort of the way a lot of people think about it, unless, of course, they are able to take the $10 million that they just got and really amplify the company. But one of the things they say in their filings is that something like 92% of their profit or their sales comes from, I think, 5 customers or something like that. So they have a few big clients, which creates some business risk. Anyway, so, and look at this. Now we've hit a high we peaked at 213% on the day. Yikes. Okay, so So what typically happens when a company does an offering like this and they announce it's at 40 cents a share is the stock is dead. It just starts going down more and more and more. And you also have to recognize that going from a 9 million share float to a 37 million share float is massively diluting all of the existing shareholders, right? If you currently own this stock before that, you just got diluted by a huge ratio. So it's really not a great thing for that to happen. Now, in all fairness, this company did have an F1, which was an initial registration of new securities. So all shareholders were on notice that this was coming. However, in spite of this being out there, and let's see what this one was for. Yeah, it's been out there for a few weeks. In spite of it being out there, the price hasn't really been dropping that much. And in fact, if anything, the price has moved up a little bit. Now, I don't know exactly why that would be, but anyways, the price has been moving up. So if what normally happens is the price tanks, it makes sense that we saw this drop. So when I saw this drop, I thought, whoa, it's an offering and it's at 40 cents a share. This thing is done. And so probably, you know what a lot of people did? They just started shorting it. Short, 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 short. So when you go into your platform, you'll notice that this is not, interestingly, this is not on short sale restriction, which means if you want to short it, you can short right on the bid. Now you have to locate shares. You have to find the shares. So I have to locate window here, and let's see if they have any available. Oops. So they have shares available at Lightspeed, and they're pretty cheap. It's not very expensive to buy or borrow shares. This one's the cheapest right here, less than a penny per share. So you could borrow 10,000 shares for 20 bucks. That's super cheap. All right, so it's not cheap. It's not expensive to borrow. It's not hard to borrow, and it's not on short sale restriction. So all of a sudden, a lot of people see this and they're immediately hammering it short. They're like, this is a short. This thing is going to drop. They did the offering at 40 cents a share. And then all of a sudden, it's printing. This is what's crazy, is it's 266 and then it's 320. And usually this first pop here, people short it and it drops even more. It's a bear flag usually. It drops, it pops up, and then it goes lower. And so all of a sudden when it's going to 340, it rips suddenly. 360, $4, 420, 448. And now the people who shorted here and here are like, uh-oh, I don't know what's happening. This makes no sense at all. And this thing rips up to 518. Now remember, it's pre-market, so there are no stop orders and there are no market orders and there are no halts, circuit breaker halts, that is. But this squeezed up basically 100% in about 40 seconds. It drops back down to 383. It pops back up to 450. And then notice this blue ascending resistance line. This is the line that I drew from pre-market. So once we got back over it right here, I took this trade right in here for the squeeze through the new high of day. So I got that last trade and that put me up to $5,418 on the day, which is nothing crazy, but a decent little day. The thing I'll say is that this whole move here, it felt like there was just a huge amount of selling. And so now I have a little bit of a question and I don't know the answer to it, but this is the question that I'm going to ask. So somebody now owns 27 million shares of this stock at 40 cents a share. They're currently up over $100 million. So 27 million shares. When this thing hit $1.50, they were already up 27 million. 250, right? 27 million. So now it's 54 million, right? So 350. Now you're at like 75 million, 80 million. 450, you're at 110 million. 550, you're at 130 million. 650, you're at nearly $60 million. Whoa, $160 million seemingly overnight on a caviar company. Okay, that is insane. That is crazy money. Now, what we don't know is what I can't tell just by looking at the filings is who the buyer was of these shares. But what I can see is that in the F1 here, they say that they're using Sunshine Securities, LLC, as their placement agent. So let's see where their name is. So I just was looking at this Sunshine. Oh, maybe it was on this one. This is on the financial, sorry. So it's on the F1. So Sunshine. So we agreed to pay AC Sunshine Securities. They're making they as the placement agent is making a 4% commission on the gross proceeds raised in the offering. So they'll make about $400,000 or whatever it is on the $10 million that they raised. So whenever I see that, I always check the company. So I look up this underwriter, and the way you could do that under BAM SEC is you go under screening, all document search, and then you just type in their name. And then I just see what other companies have they been involved in, just kind of out of curiosity. And I'm familiar with all of these names. I'm familiar with pretty much all of them. Let's look at some of their charts. So we'll move this here. So the first one was INHD. So INHD, and if we want to, we could pull up, just click on another window. So let's see where this one's located. I'm wondering if this is, so this one's in Texas. This one's not a Chinese company. At least it doesn't appear to be on the surface. Although the name sounds not Texan. I'd have to go into this. I'd have to look at this company in a little bit more detail. So we can do that in a second, but it doesn't really matter. Let's just go back to a couple of these others. So CTNT, that's a Chinese company. So CTNT, boom, boom. And let's just look at the chart on this one for a second. Back up that chart. So how does INHD look? Not great, I'd say. So not great. CTNT, this one had this big spike in May and then came all the way back down. It's at 21 cents right now. MSS, this is one that was involved in a pump and dump. So they had that dump there, the WhatsApp scammers. That's from the episode from last week. TWG, we already know that one. AIXI. And, so as I look at these companies, I know a lot of these are Chinese, and I know a lot of these have had these massive dumps. GSIW, GSIW, that one for sure. LICN, VSME, TCJH, pretty much all of these. So now you're like, okay, this is a investment bank that mostly works with these types of companies. These companies are maybe doing the best they can, but not doing super well. So in any case, what I'm curious about is the person who's up $160 million overnight on this caviar company. And so now, how much volume do we have on this today? We currently, as of right now, have 77 million shares of volume. So could that person have sold all 27 million shares today? At this point, maybe. I don't think so, because I think if they had been selling to that extent, that would be a third of the volume. I think that the price would not be up 220%. I think that you may have some intraday traders who are getting squeezed to the short side. I'm not sure. I've looked to see if there's any WhatsApp scammer groups that are, putting out alerts on this stock. I haven't seen that. I think what's going on here is you've got intraday active traders who are just capitalizing on some of the momentum, but we don't know if that person that got the 27 million shares has sold. And we probably will. Well, so I guess we should get a Form 4, because that is such a large position, unless it was divided among a number of different investors, in which case, if none of them are more than a 10% beneficial owner, I suppose it wouldn't, they might not. But in any case, there's now a new high of 231%. So, you might say, Ross, why aren't you trading this more? And my gut feeling on this was it just didn't feel safe. And I was happy to trade it early in the move. I was happy to trade that rally back up. But then after that, I just felt like, this has a lot of risk in it. There's someone out there with 27 million shares. We don't know when they're going to start selling. When they do start selling, if all of a sudden it halts down and it opens a lot lower, I could get trapped. And so it's important to know as a trader when to walk away, when to just say, I've done enough. maybe I didn't squeeze as much profit out of the market as I could have today, but I've walked away with a little more in my pocket than I had at the beginning of the trading session. And I want to be grateful for that, because it's as soon as you're not grateful for that you start being reckless, taking unnecessary risk, and making big mistakes. I think short sellers are probably getting smoked on this because it doesn't make sense. They're going to argue, this is a company doing $2 million a year of revenue. How is it up this much, right? So now, just as we speak, it's now up 273, 287% as it hits a high of $8. But if I show you the level 2, you could see 80 million shares of volume. I mean, this thing is really incredible. So that is what we have right now going on the chart, is a little bit of a divergence where you've got declining volume, but the price is still going higher. That can happen, but usually we'll get to a point where we top out. And as we're starting to see a topping tail form here, which is sort of the upper part of that candle, that can be an early indicator that, some people are taking short positions against that high of 830. Although, gosh, you've got to be so careful on this. So I think that it wouldn't surprise me if regulators ask, how it came to be that 40 cents was chosen as the price, because that was a 75% discount over the current trading price. It wouldn't surprise me if regulators try to figure out, where that initial spike came from. Just that very initial move. Was that a WhatsApp scammer group that sent out an alert? Or, what was it? Where did that volume come from? Was this a stock that someone just had on their radar for no particular? I mean, come on. It's not a coincidence that this happens and then the offering gets announced like an hour later. You know what I mean? Like that. And I'm not saying the company's involved. I just think that something there is a little shady. And I would think that regulators might want to take a look. Now, as we said, CHSN was the pump and dump that happened last week. I did my episode exposing this pump and dump. Regulators did end up halting the stock. So it's been halted. No trading is allowed while they're investigating, presumably what's going on and, who was the ultimate people who really benefited from this. Now, volatility is something that I'm happy to trade. I love volatility. No doubt, TWG is presenting a good amount of volatility. But the thing that I prefer, if I'm going to be honest, is trading volatility when I understand the catalyst and I feel like I can measure my risk in a healthy way. And when I'm trading something that I'm concerned about the risk of someone dumping a ton of shares, like someone who just got shares through warrants or through, an offering, a private placement of some type, that creates risk. Anytime we're dealing with these Chinese stocks, that creates a degree of risk because we just know that a lot of these Chinese stocks end up exhibiting this really unusual behavior. So look, you're all adults, manage your risk as you feel fit. If you were able to trade this today and you did well on it, let us know how you did. If you got a WhatsApp message on this stock, please tell us, because that would be really interesting to know and get that confirmation. I haven't seen, I tried to search and I couldn't find any or anyone else posting that they got any, but it's an interesting move. And really what I had just never seen was a stock that dropped 50% and then ripped up 100% that fast. I mean, that was just unreal. So boy, what a roller coaster. And I know some people got smoked in that move. Some were long and got smoked. Some were short and got smoked. And, I'm sure that some people just got smoked here, buying it or shorting it up around these areas. So as always, look, you got to remember trading is risky. You got to manage your risk. But for me, I'm an active trader. I show up every single day. I've got a window of profitability. And for me, that window is really early in the morning when these companies are typically putting out breaking news and then leaving before things get too crowded. Because at this point, you've got a stock that's up a lot on, in fact, bad news, which doesn't even make sense. And you got to start to be careful. So I think eventually, maybe it's a week from now, maybe it's 2 weeks from now, I think that the price of this stock will return more closely to its logical valuation, which would be, the net profit this company is doing, the prospects of future operations and everything else. But in the interim, remember, the market can remain irrational longer than you can remain solvent. So if you're shorting this because you think it's going to go back to 2, you might be right, and it might, but it could go to 14 first. So if you can't afford to keep holding, make sure you manage your risk. All right, that's it for me. Thank you guys for tuning in to this episode. I'll see you